Okay, so very quickly, what's the anatomy of the real estate bubble? In the wake of the $8 trillion dot-com collapse, the Fed moved to prop up the economy to avoid recession. They drove interest rates down and flooded the system with trillions of dollars in liquidity. The creation of the real estate bubble was intentional to perpetuate the wealth effect of the 1990s, to keep Americans feeling rich and prosperous and to keep them borrowing and buying. And it worked. It worked. Americans did feel rich and they kept borrowing and buying everything. Over 68 million Americans now own their homes, with millions owning 2 or 3 homes. Okay? Tens of millions of people bought homes or condos via creative financing, often with nothing or very little down. You remember all the condo flipping that was going on in Florida, where the condo wouldn't even be built and they'd buy it and they'd roll it and sell it and it would sell 2 or 3 times. It was a speculative blow-off. It was a typical speculative bubble, like the tulip mania in the 1700s in Holland, like the dot-com mania in the latter half of the 90s. Same deal. Tens of millions of homeowners have become dangerously over-indebted with no margin of safety when the economy weakens and the real estate prices begin to decline. Hey, if you bought your real estate with nothing down or 5% down and real estate's already dropped 10%, you're upside down. You're upside down already. And that's what's happened with the subprime lenders. I forget, David was telling me the other day, one of the states actually had, I think it was California, which state was it? Was it Colorado, had 40% of its loans in the last year or so on houses were subprime loans. People who couldn't afford to be buying, shouldn't have been getting into real estate at all, had bad credit, and guess why? So many of those people are now going into default. Okay, over the past 5 years, real estate activity and everything related to it has accounted for 40 to 50% of U.S. economic growth. So they kept the economy floating with the second bubble, which was the real estate bubble. Now, American savings have now dropped below zero as they begin to use their newfound real estate wealth or their homes as ATMs. They just used their homes as slot machines and went out and took out home equity loans. Tens of millions of homeowners drew trillions of dollars in cash out of their homes via these home equity loans, thus increasing their debt and reducing their equity and liquidity as their house values rose. In 2005, 40% of houses bought in the U.S. were purchased as second or third homes, not primary homes by investors and speculators. You got to let that one soak in. 40% of the homes bought in America in 2005 were second and third homes bought by investors and speculators. Now, guess what? Those investors and speculators have now seen the handwriting on the wall, and they've backed off. Guess what? That's 40% of the demand in the market that's now gone. Whoops, what happens when you pull the demand out of a market? It starts going down like this. That's an incredible number. Finally, a combination of rising interest rates, massive consumer over-indebtedness, and market exhaustion began to slow down the residential real estate market in the second half of 2005 and throughout 2006. The shock of rising deferred monthly interest, with mortgage payments dropping 25 to 75%, the bursting of the condo bubble or mania down in Florida, where you know prices are down in many instances 40 and 50% already. This is early, it's going to get worse. And California. California's in trouble, but it hadn't dropped as far as Florida yet. And the other bubble states, and the changing of market sentiment from greed to caution to fear is all part of the rollover. Okay, at the top of a bubble, at the top of one of these blow-offs, there's irrational greed. There's irrational greed, and no one can imagine the market coming unglued. That's what the dot-coms looked like when you had these companies coming out that had never earned a dime, and they were going from $10 on their new offering to $300 or $200, and they had no prospects of earning money. They didn't even say they would ever earn money, and that was driven by greed, and that's what the real estate market looked like just a couple of years ago. Okay, the government, the Fed, Wall Street, and real estate brokers and mortgage lenders all hope for a soft landing, a 5 or 10 or 15% decline, and I hope they get their soft landing, but I'll bet you $100 they don't. Hard landing, which is 30 to 50% declines or more, is more likely, as was seen in the real estate boom-bust states in the 1980s and early 90s. The most extreme bubble areas, declines of 50 to 80% are likely. Does anybody still remember that real estate took a dive when you got your problems in the oil patch in 1985 in Texas? Do you remember John Connally? Do you still remember him? He was a governor, popular governor, Secretary of the Treasury. He went broke. Do you remember who owned the Dallas Cowboys? Clint Murchison. He went broke, $2.1 billion in Texas real estate, and thousands of other speculators and investors and builders and promoters, developers and so forth went under then, and it spread to the Northeast and the Southeast and finally to California. And you had real estate drop some 50% in Bel Air and Hollywood, in Brentwood, and a lot of places in Southern California. Gee, that was only about 18, 20 years ago. I guess maybe a little longer than that here. Can that happen again? And is the bubble bigger today than it was in the 80s and 90s? A lot bigger, a whole lot bigger, okay? So we think that the worst bubble states are probably not going to be Texas. Maybe you're blessed and real estate will never go down in Texas. I hope that's the case, okay? But you go out to California and you go out to Florida and you go to the East and West Coast and you go to an awful lot of parts of the country, and real estate is beginning to drop pretty sharply now, okay? And even in the Midwest where there never was a bubble. In a hard landing, millions of homeowners will go into default, foreclosure, or bankruptcy. Tens of thousands of builders, developers, and speculators will go to the wall, as in the 1980s and 90s, and America will sink into a steep recession, or worse, probably in 2007. David pointed out to me in the Wall Street Journal today, there was a building company. Which one was it? What is it? KB Homes. Okay, KB Homes. Their earnings just dropped 84%. 84%, one of the larger home builders in the country. This is the wave of the future.